Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, August 4th, 2010. Let's get started by taking a look at a couple of U.S. fundamental releases. We had the Institute for Supply Management say that its non-manufacturing index rose to 54.3 in July from 53.8 in June. The index fell in June for the first time since February, and economists had expected this month's survey to fall as well. The ISM said that its employment index climbed 1.2 points to 50.9, reaching its highest level since December 2007, while the new orders index rose 2.3 to 56.7. The news gave the US dollar a bump with a big jump in the euro dollar and the dollar yen pairs in favor of the greenback, which we will look at in just a second. Not only is the data a relief in terms of breaking a string of weaker than expected readings we have seen out of the US lately, but the internals showing that the employment subindex moved above 50 was also a positive. With the manufacturing sector cooling now that the inventory restocking process is nearly complete, it's up to the services sector to take on the baton of job growth, so that's why today's ISM survey services report may have come as a welcome sign. A second report today showed that U.S. private sector employment rose by 42,000 in July, the sixth consecutive monthly gain, but the pace of hiring remains rather weak, according to the ADP. Over the past 6 months, increases have averaged a modest 37,000. Jobs in the service providing sector rose by 63,000, but employment in the goods producing category fell by 21,000. What the Services Index report likely does is cool the market's rush to price in further quantitative easing steps from the Federal Reserve, which meets to discuss policy next week. Yesterday, we talked about the chatter that the Fed may decide to buy new mortgage or treasury bonds when its mortgage bond holdings mature instead of allowing its portfolio to shrink as had been expected. That would in effect prevent tightening in monetary policy and could be a precursor to more steps to bump money into the economy. It seems, however, that today's data may have helped to ease some of those concerns, and the market was covering some of those short bets against the US dollar. Here in the euro-dollar pair, we see that it fell below its recent short-term support at around the 1.32 level when we entered the New York session. And we found support around 1.3130, which was our 100 period simple moving average in the 1 hour time frame, as well as a 61.8% retracement of the most recent upswing in the last 2 sessions in this currency pair. Zooming this pair out a bit, if we connect our lows from July 22nd, 23rd, and at the end of the month, we see that we have an upward sloping support trend line matching up very closely to that moving average. So a break there would mean that this pair could target this level of resistance at 1.31, or perhaps try and retest the 1.30 area, a much more important level of resistance turn support. Taking a look at the US dollar Japanese yen pair, we saw that overnight we fell to the 85.30 level, which was an 8-month low for this pair, but we rallied rather strongly in the New York session as we came back up to the 86.30 level. Here too, that was a test of our medium-term or 100-period simple moving average in the 1 hour time frame, but more importantly, it tests an old area of support from the middle of July that now may be turned to resistance. So to see if the Japanese yen can maintain the strength that we have seen over the past 5 or 6 trading sessions, it will be important for this level to hold as resistance. While the US dollar was gaining on the euro and the yen, we did still see some risk appetite in the markets. Here in the US dollar Canadian dollar, we see the pair moving in favor of the Canadian dollar, moving below the 1.0220 level, our support from yesterday's session, as we had stocks in North America rallying, as well as commodity prices, so that helped to boost the Canadian dollar. Zooming this pair out, and as we had mentioned previously, when we broke below the 1.03 level, the next level that this pair could target would be our low from June 20th at the 1.0150 level. So we'll see if that level would act as support if we manage to reach it. Turning back to some fundamentals, we had the UK Services PMI index fall to 53.1 in July, which was down from its reading in June of 54.4 and is now at its lowest reading since June of 2009. Economists had forecast the index to edge higher to 54.5. The figure will undoubtedly raise some questions about whether the economic recovery is running out of steam in the UK, despite the strong surge in growth we had seen in the second quarter GDP reading. On a positive note, we did have UK housing prices rise by the most in 4 months in July, as record low interest rates and the recovery did boost demand for homes, according to Halifax Bank of Scotland. The average cost of a home increased 0.6% during the month, beating expectations and undoing a similar size drop in June. There are some dangers ahead for the UK economy, including the government's planned spending cuts, and Bank of England Governor Mervyn King said that policymakers cannot be confident that the recovery in demand and employment will be sustained. If we take a look at the pound-dollar pair, we see that we were unable to move above yesterday's highs, which makes the 1.5960 area an important level of resistance. We wound up pairing the gains from yesterday's session and trade back near the 1.5870 level in New York afternoon trading. Since July 22nd, this pair has been a very strong performer, rallying a total of around 800 pips to the highs we had seen in today's session. So we may see some topping off and perhaps some retracement of this rally, with the next important support level coming at open for this week at around 1.57. Now, while the pound was weaker against the dollar, against the yen here, we see that following a dip in the overnight trading to 1.3580, the pound did manage to rally prior to the open of New York trading and in the New York morning session, pairing all of its overnight gains and trading around 1.37 as of 2:30 p.m. Eastern. That support came at around a 50% retracement level of the rally we had seen from July 30th to our highs around 137.60. So we will have to see whether this move, as we can see, so far this pair has been unable to move above the 137.50 level. We tested it last week and again now in early this week. So that is setting up as an important resistance level in case the pound continues to strengthen against the yen. However, we have been setting higher highs in this pair since July 22nd, giving us an upward sloping level of support, which means that prices are squeezing between these two important levels, and we should watch to see which one that it breaks above first, as these two trend lines converge with each other. Now, while we don't have a super busy fundamental docket in the upcoming trading session, we do have some important reports, including the two interest rate decisions from the Bank of England and the European Central Bank, which will come at 7 a.m. and 7:45 a.m. Respectively. We also get employment change data from New Zealand tonight at 7:50 p.m., factory orders data from Germany at 6 a.m., and in tomorrow's session we get U.S. jobless claims, as well as the press conference from ECB President Trichet. So that will do it for today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.